Ladies and gentlemen, welcome back to another nightly recap here on the GNN Network. I'm your host, Hotep Jesus.
Hotep, you're a genius. HotepJesus.com.
And we're about to take a look at the markets. Specifically tonight, I want to take a look at the S&P 500, the greater market, where we're headed, and of course, Bitcoin price action this week. We're going to talk about that with Landy and more, of course. But I have a goal with Landy tonight. My goal with Landy tonight is to get him to admit that we are headed into bear territory. Things are about to go down as soon as within the next 2 weeks. That's what I want to get him to capitulate. If we can do that, we won. We won. If that doesn't happen, then we're taking an L. We're going to take the L. So, without further ado, I'm going to bring the man of the hour on, Crypto Landy, Mr. Technical Analysis, Mr. Langley Landy, and see if he will capitulate and admit that we are, in fact, on our way to bear territory. Let's see what happens, chat. Landy.
Hello, sir. How are you?
Life is phenomenal. How are you, sir?
Absolutely amazing.
Great. I'm glad to see you have your clothes on tonight.
Yep, finally.
No more half-naked puppets. Glad to see it.
Yeah, I have an image to recover at this point after showing puppet skin.
Yeah, you've got to repair your brain right there. Bring some dignity back.
Yeah, a little bit of brand triage.
Yeah. At the very least. What does this button do? I'm sorry. I got ADD. I see new shit in software and I start clicking around and playing with it. Like, oh, what is this? Is this an Instagram filter? I'm just video settings. Hold on, I'm in video settings right now. All right, so we're talking virtual background. What the hell? Profile. I'm sorry, bro. Um,
It's okay.
so I got filters over here. What does this do? Okay, nothing. Never mind. Um, the greater market. I want to get you to capitulate and admit within the next 2 weeks, at least according to the S&P 500, that we are headed for bear territory.
Okay. I mean, yeah, I mean, we can discuss it. Yeah. I mean, the time frames are going to be important to define what it is that we're referring to in terms of bear territory.
2 weeks. But time frames you're saying,
Well, because
or
a bear market, there's different criteria for what a bear market is.
okay,
Typically it's a 20% downside move, and everybody declares it a bear. But realistically, we had those larger moves last year, um, Q1 to Q2, right?
hmm
And those are technical price action based bear markets, but in terms of structural bear markets, it's still an uptrend, right? So it really depends on what time frame are you looking at. We can go into a bearish trend.
oh no, I'm saying on the lower time frames. I'm
Okay.
saying I'm saying that we are headed for a severe dip to create higher highs.
Okay. I mean, what do you want to look at first? Do you want to look at S&P?
Well, let's look at S&P 500
Okay.
and let's look at the weekly chart.
Okay. All right. Yeah, let's do that. So here I have the S&P on the daily. We can go ahead to the weekly. Um, there is there there there's no bear to be found here yet.
It's right there.
Nah,
That recent candle right there.
this doji,
Yup.
but this
A doji
well,
outside. It's a doji outside too.
yeah, it swung the high, it swung the low. Yeah, no, you're right. It is not a nice looking candle. That is 100% for sure. Now, here's the thing though. When you look at the higher term time frame, this is this is coming off new all-time highs. So, when we're looking at is, are we looking at a correction or a bearish period for the weekly that could result in a downtrend from here, right?
Mm-hmm.
So, realistically, if we were to identify the very powerful uptrend that we have going on here, we can actually put a swing trend indicator on here. We are in higher high, higher low structure, but volatility is decreasing at the highs, right? So
Mm-hmm.
typically
Mm-hmm.
these consolidations result in corrections to the downside to find that liquidity, but that does not mean that it's a bear market, because it's there are two ways that we have to look at this: is what would be typically defined as a bear market. And let's go ahead and say that, okay, from here, a 20% downside move would be a technical bear market, right? And also, it depends on how quickly it happens.
What's the price point for the 20% move?
I would put it around 550.
550 is your mark?
Well,
All right, let
20%
me
down
see.
from here, yeah, would be 550 or 5500. If you're looking at SPX, right? If you're looking at the trust, the S&P trust or the S&P 500 trust, then you're looking at, a technical bear market and price action would be 20% to the downside. And you can take it from high to low. It puts you around, 5,500 to 5,550. So, and then when we look here, we didn't even get that back here, back in last year. Oops, sorry. Let me go ahead and grab the right measurement tool here. We had, oh no, we did get a technical bear market, but then recovery was very, very quick, right? But at the higher term timeframes, the weekly can correct hard, even from here.
20% is 5,500.
Yeah, so 20% from here, from the high at the high is where it's 696. Yeah, so 20% would be around 5,500. Yeah, so if you're looking at SPX, for instance, it would be from the actual all-time high. 20% is going to put you around 5,550 to 5,500.
Sounds about right.
Yeah, so that would be a technical bear market, and we
I think that's doable.
I mean, it's absolutely possible considering some of the events that are coming up. I mean, we're coming in towards the end of the month. We're probably going to get some pretty kind final quarter over quarter GDP numbers next week. But realistically, it's the end of the month where we have FOMC, and then who knows if we're going to see the government remain open, right? Coming into the 31st, right? We don't know. That narrative is going to heat up. Now, one of the things that I do want to caution is the last time that we had a government shutdown, what did? We just went straight up. We just kept trudging to the upside, making new highs, right? So that was, all of that time frame, September, October, November time frame of last year. We just went up. We had a little dip down in October, and then we just went straight up again, right? So big thing here is, what is your definition of a bear market on higher term timeframes? Because
20%.
Well, that's going to be a correction. Even 20% from here would not even do much in the macro trend for the S&P or SPY in this case. So you'd end up with like with this, the last higher low, if it gets taken out, it's probably pretty ugly. Maybe we go into a longer bearish period, and that's sitting at 650, right? 650 is the actual candle on like the monthly, right? That's the last swing higher low. If that's breached, we have a lower low swing. But this is all part of a topside structure right now. And if we're going to see a bear market ensue from here, you would see it start on the weekly. And that's going to be on any closes below, a trend break on the weekly is going to be any closes below around 680 right here. Right below this yellow line I got here, that's where the swing low also came in. So this is a higher low structure that closed. We have the inside bar here. Could it be a spinning top kind of thing? Easy criteria is trade and close below 686 next week. Then we're likely headed down to 680. That possibly then could break this uptrending structure here. If we close above 696, we're going for 700, 705 easy, or 7,000 and 7,050, right? So realistically, there is no way that anyone's going to declare a bear market, but definitely a bearish period with a downside move is possible from here, especially when you're looking at the daily, right?
What happens historically?
What happens historically on the weekly? Well, I mean, even just in the most recent trends, when we start to see consolidation at the highs, like we saw this from 24 into 25, right? Post-election, we see the move up. We see the higher low, higher high, higher low, higher high, but failed continuation above, 610 or so on a close. It closed right on it back here. So that led to, of course, a breakdown of this higher low structure and this candle right here a couple weeks later in towards that Q1 to Q2 transition. And then boom, lower low, lower high, and down into a bearish period. Technical bear market, fast recovery right back to the upside for new highs. That's from the weekly time frame, and then you can call that a technical bear market, but that's not what many are going to like classify as a bear market or prolonged bear market or a structure break on higher term timeframes like a monthly. Definitely downtrend on the weekly, but it resolved itself very quickly back to the upside. And that's where we could be looking at something like that right now. So if we look at the weekly, we could check a few things here. First off is where are we in terms of volatility? And I like to use, of course, bands. For that, we're in a compression while grinding to the upside. And technically, we can get 700, 705, 710, even 715 to the top side if it continues. To the bottom side, if it drops 680, things start to change. Structure break below there, probably mean reversion back to the 670 to 675 region. And then it's all about this bigger low down here. And that would be your 660 to 650. And that's where things could potentially change. Right here is 660 to 650 on this weekly higher low right here, because that's the last monthly higher low. If that breaks, we could be looking at a potential higher term time frame trend shift, like on the monthly, that could lead to a prolonged bear market. Absolutely. But we're not there yet. We're not even close to being there yet. This candle here on the daily, sure, it's hot to trot. If it paints a high, it's going to be bearish divergence again. Momentum's pinned to the top side here. We're starting to lose momentum at the highs here, and all of that has been borne out in this, in the candle structure, just kind of grinding sideways. So correction's definitely in order sooner rather than later. But we can't necessarily rule out higher highs before we get a wider correction just yet. And the criteria really is going to be next week as we head into the final week of the month, where we have the FOMC meeting coming up on possible, government shutdown. Who knows what the narrative is going to be? They're probably going to prime the government shutdown narrative next week, right? And that's going to be something to really pay attention to, considering, the Democrats' fight with Trump in various states and over immigration policy and ICE and like all this other stuff. If they want to deprive people of their paychecks, you shut the government down in the hopes of slowing things down and grinding it all to a halt, right? So that is something that is likely being considered by Democrats to kind of block things. And kind of hold the administration's feet to the fire in terms of government funding. But how does the market react? And next week will be very telling. So coming into next week, it's really easy.
Tariffs, Supreme Court decision.
Well, they already had a chance to do that this week, so they just put it back.
They pushed it back twice.
Yeah.
What I'm saying is that shit's going to come at some point.
Yeah, I mean, maybe they'll do it, next week, or maybe we get a culmination of all kinds of things, FOMC meeting last week of the month, tariff decision last week of the month, plus a government shutdown and try and shock markets. I could absolutely see that happening, but I think next week is going to define things, right? Because the next week's closure is going to be very clear, because we have like the most easy, clear criteria on this weekly candle right here. If we are to really kind of spec this out, what we're looking at is we break and close below that low, highs in. We close above the high, continuation. So it's really 686 to 696. That's the zone. If we close below this, we're headed lower, likely going to go for a structure break at 680. If we close above 696, or if we swing above it but fail to close above it, that's a warning sign, right? So just like this week's candle swung above last week's higher high and then closed below it, it's otherwise known as bull bait, right? You swing the highs, get everybody long, close below, right? That's usually a bull bait candle, but we have indecision because of the buyback this week. So the criteria is clear. We start trading above.
What's your third deviation on the bottom?
On the bottom, it is down at 633 right now. Where we have confluence with the 650 number I give you.
What's your second?
Second is at 646.
And the first?
First is going to be 660.
Yeah.
And then the basis band is it's going to be, when this opens though, what you're going to see is 650 lower second, 646 right now. This is going to update when the market opens for the new weekly on Monday. And we'll see this at like probably around 650. We'll see the lower third somewhere around 635 to upper 630 region. We'll see the basis move from 673 likely to 675 to 677, starting to creep up towards this 680 kind of invalidation area for the last higher low on the weekly. But it's really even if it just, next week's going to be telling. If we trade above 696, 700 or 7,000s in the cards, possibly even 705 and above. It's all about where it closes though, because that's going to tell us if we're going to get continuation to the upside or if we're going to be, possibly just baiting more bulls. In this case, if it does close below 686, so we got a 10-point range here or 100-point range if you're looking at SPX, then you're really considering like, okay, the high's in, it is another higher high. It would be bearish divergence forming, momentum shifting, but it's all still about the mean reversion. Do we get a structure break or not? Right? Below the 680 from there, and just take it one step at a time. If we lose 680, we're probably quickly going to fall to 670, 675, and then start sweeping for the 660 area here by the lower first. Anywhere below there, we're hitting 640, 645. Anywhere below there, 630 to 640. And things could potentially start to bounce and then try to reject. And then we're likely looking at that 20% correction in play.
The first stop is 6,800.
Well, 680. Yeah.
Yeah, that's the first stop.
Yeah,
that's what you got, right?
Yep, 680, 6,800. Yep.
Yeah, that's the first stop.
Yep. That would be, we start seeing it trade below like 686, 685. Yeah.
If that break, then we headed to, I'm going to tell you in a second. Hold on. 65.50. I think that's what you said, right?
It's right around there. Probably lower term time frame 6,700.
Yeah.
To then 6,550. Yeah.
Yeah. That's the next level after that. Yeah.
Yeah, and that's right where I have that lower first, basically, right around that area, slightly below.
Okay.
Because that's this weekly here, 66 to 65. Right. That's the high. That's this low side structure right here. If that breaks, we're stair stepping down. Yeah, we're stair stepping down. We're going for a larger correction.
Correction. Yeah.
Yeah, much larger correction that could turn into something bigger, because that's about a 7% drop. And then if we get any kind of rejections on retest back higher, looking down towards 600 points is probably the next big swing area. 600 to 605, like on longer term timeframes. Anywhere below 646, 650, we're getting expansion on the weekly to the downside.
Yeah.
Right. So that's volatility expansion. We'll start to see VIX really pick up on that downside move. Right.
Yeah.
So then we're likely looking all the way back to, we're likely going to come back and find support somewhere around the 600 to 610 region, right around these highs. And get bounces. But if it goes deeper than that, we're going for the full 20% or more to the 650s. But it's really about the speed of the move. And that's where we can reference VIX real quick here. And we can say like, all right, this is pretty low volatility historically, going back to, the post 2020 move down, and then 2022 bear markets, with that increase up to like 38 on VIX, and then the trend down ever since, setting that floor around 11, and then since 24, we've been in and around the bottom side at the 14. So we're looking at a volatility increase likely sooner rather than later. This is likely going to increase, the end of this month going into next month, right, is where we're looking for that volatility increase. But it's all about the criteria for the weekly, because the weekly is compressing right now in terms of volatility, right, at the highs. So it's either going to break out to the top side and continue for another leg, or it's headed to the downside. The biggest thing is if it goes for another leg to the upside, that's your classic melt up scenario where it's just going to grind. And that's, where you get these melt ups where it's like, okay, you get it, you start grinding and just grinding, correction, grind all the way up with then larger corrections in between. So, I think that we're going to see a volatile move, and those are when you see the increase in VIX, you're looking at a downside move in this case. But VIX would increase to the downside while price mean reverts back to the mean, right? So you're looking 660, 670 as a base area. If 650 is lost, then things get exciting to the downside. Nice move up in VIX and kind of take it from there.
What about the futures, right? Like I go to futures and my account has a D next to it, says market close data is delayed. You got the same thing on yours?
Yeah, because it's closed. The data is delayed. Also, the market's closed. So,
but
it'll
why does
open
it
again
say
on
the
Sunday.
data is delayed? Like it says it
Data is
could be
delayed by
up to
10
10
minutes.
minutes. What is
Yeah.
so what does that mean for me as I'm looking at the markets? How am I supposed to look at that?
Well, I mean, are you trading futures?
No.
Then don't worry about it.
But I mean, if I'm trading the underlying index,
I mean, you're trading the S&P. You're
yeah,
trading SPX or SPY.
right.
Once it's open, yeah. I mean, you can pay. Yeah, Markel's correct. You can pay for the CME data if you don't want the delay, but it's not going to really do anything for you. Because by the
I
time
can't look at the futures to understand like what the market's
you
about to do.
can, yeah, you can, but you're not going to futures once traditional markets are open. Futures don't. It's not really going to tell you much more than the market itself. Once futures or once the Monday session opens next week, at 9:30 Eastern, you're the only reason that you're going to watch futures is going into that market open, right? That's where you want to watch futures. Realistically, you're going to be trading SPY. That's where all the volume is. That's where the majority of the market volume is, and that's where you want to be. So you don't really need to be paying attention to futures to get you're not going to get any edge on SPY or SPX once the session open in New York is on, right? Chicago's just giving you on the weekend, Sunday when it opens, it's just giving you an idea of where positioning is occurring, and where liquidity is kind of flowing, but it's not going to do anything for you once the market's open. It's not going to give you any edge, even if you paid for the data, to be honest with you, unless you're going to go trade CME, right? In some brokerage accounts, you can trade CME, right? Or you can go and you can do it direct if you want. But realistically, there's no reason to, because you can just trade SPX or SPY and you're going to have tons of volume. And that's where the majority of the volume is going to be. So I wouldn't worry about the delay.
I'm looking at the S&P 500 futures, and it looked like we got a break. To the downside. When does this open back up again? This futures thing?
What time frame? Sunday. I don't remember what Sunday. Sunday, like 5 p.m. or something.
Oh, okay.
At 4 or 5 p.m.
Is it open all the way until the next day?
Yeah. Yep.
Okay.
Yeah, until it's going to be open all the way through the session too.
All the way through the session, right?
Yeah.
Okay.
Yeah. What time frame are you looking at? Lower term time frame?
1 hour.
6 p.m. 6 p.m. Thank you.
Yeah, I was looking at the 1
East
hour.
Coast. Yeah, it's 6 p.m. East Coast, because right now, yeah, that'd be 3 p.m. for where I'm at.
Mm-hmm.
So
1 hour? Yikes.
I mean, yeah, but it's not really. I mean, this can get continuation down, but
it's gonna.
It's really about the 4 hour. Yeah, I mean, it can head down to 69.40 and head towards that 69.25 area.
Yeah, I got 69.35. Yeah.
Well, I mean, that's the closing area, but it's all about losing the swing in a close for like the 4 hours. It relates to those lower term timeframes that you're watching, right? But if you're going to watch that, it's really about, because you're going to trade either SPX or SPY. So you just really want to pay attention to once the market's open, where that is for SPX or SPY. So that same low is at 680, 68.85. So 688. And then it's likely going to head down to that, 682 or 68.25. So it's the same areas.
Mm-hmm.
Because once the New York session's open, it's all going to trade together.
Mm-hmm.
So
yeah, I'm looking at the 4 hour now. That 12 hour is nasty too. That 12 hour, we got a 1-2. We got an inside, then a downside bar on the 12 hour.
Yeah, I mean it was essentially a gap fill up and then right back down, paint the high.
And on Thursday we hit the weekly high.
Yep.
And bounced right off of it, rejected off the weekly high on Thursday.
Yeah, and I mean we could get a larger move. I mean, just last, in the end of October coming into November, right? You had the larger move down.
Mm-hmm.
We're compressing right now on the 12 hour. So I
know
think
what that means. You know what that means when they compress on the landing bands.
Yep. So, but realistically, it's not going to resolve anywhere. It's not going to resolve with a wider downside move unless it starts breaching that 68.25 or 682.
Yes.
So
yeah, I agree with
that's real. Yeah. And then, but what I would be very aware of is liquidity grabs above to 700 to 705 or 7,000 to 705.
Absolutely. Absolutely. There are going to be those moments where, it's going to be like those little mini bull traps. Yes. It's not going to be just a spit to the downside.
Yeah. And I mean, my big thing is watching VIX here. VIX is floored. It's starting to really paint like it wants to go back to the upside here. Daily's trudging up, but it's all about that weekly. And weeklies take a while to play out, but when they start, setting the weekly low here, we start getting an increase towards, 19.5 to 22 on the VIX. Things get really interesting around 22 on the VIX, because if we get above there, we're likely racing and correcting hard to the downside.
Mm-hmm.
So that's really where I'm watching things. And obviously a VIX, I don't really have to pay attention to the VIX because I have, my bands on. So we can see that it's already, compressed up here. But this is mean reversion. This is actually a bullish setup until we get, failures to continue. Right. So because the bands and, we're tracking above the basis, which is the 20 simple here, that this setup is, we could correct all the way down to, 6,300, 6,350. We could even swing through it, but if we close above it, we're looking at a massive bounce up. It's all about if it breaks structure and does something like this, like on the weekly, this is where we have to be careful, right? Because if this comes down and breaks these lows, right, and then comes back up, right, because this is a compression. When you see a compression like this, you're looking at, before resolution, the upside upper second is usually going to set the cap until it's closed above. Downside lower second is going to kind of set the floor until it's closed below. And you don't usually see a mean reversion move shoot all the way down without a bounce. Excuse me. So, example.
I agree with that. I totally agree with that.
Here we go. Example. Big upside move. We mean revert. We put in the highs. We move right down to the lower second. We shoot through it. We bounce up, and then the real move down happens.
Mm-hmm.
Right. So we had these 3 weeks where we started to breach, get that expansion, but then we got that move back up and then the move down. Markel says VIX spikes above 30 usually set a major low. Yeah. 100% right. Yep.
He said, is there a scenario where we spike and stay in a high
VIX
environment for a few months?
I mean, if it's just a constantly crashed market on the weekly, but typically no. You can stay elevated, sure, but like look at 2018, boom, up to 50, 55. Didn't stay there. Cooled down. We got another spike, 40. Cooled down for weeks all the way till January 2020. We had 95 VIX, and then it was just all down from there because of the grind. 22, we hit the 40s, back in 22, January, February of 22, and then started to trend down as we went into the bull market again. 22, end of 22, setting those lows. Going in, we set the low in 24 in August, set that low again on the high side of VIX above the 50s. More recently, we've seen lows set around that 30, right? But that's because we haven't seen we haven't seen the major Six Sigma event just yet. So we've had successive Six Sigma events more than ever before, right? Six Sigma event back here, Six Sigma, Six Sigma, Six Sigma, Six Sigma. And then more recently, we've had a Six Sigma event in 24 and then right away again in 25. That that summer event prior to the election. And then we had the event, the tariff event, but we were looking for this anyway, Q1 to Q2. Are we looking at another successive Six Sigma event? This always happens towards the end of turning events in any kind of end of a turning cycle for financial markets. So we start getting more and more Six Sigma events with increasing magnitude. And that, could we be looking at that here? Sure. I think that there is a scenario where we get a melt up in equities, and continue to melt up and just defy gravity, and it holds off for a much, much larger crash later.
Okay, so S&P 500 begins to dip. Bitcoin goes to new all-time highs at the same time. What's the likelihood of that scenario?
S&P 500 and a rotation essentially is what you're talking about here. I don't see that happening. If S&P starts to reject and dive, Bitcoin's probably going to reject where it's at right now. So I mean, could it push higher? Sure, but look at where Bitcoin's at, bro. This is like straight up the easiest damn chart in the world. I've been calling this step by step, day by day. I feel like a 90s sitcom jingle, right? Step by step, day by. Sorry.
We got support at the 94.6 at the 94.65 level. It bounced nicely right off of that twice.
So here's the thing, though. Realistically, that's too low term time frame for me because I'm a swing trader in these markets. I don't really scalp too much. I've even pulled back on intraday trading, and I've gone to commodities for intraday trading. There's just beautiful volatility there. This shit is boring. Now I positioned off the lows. I've been taking profits on the way up, and all of the things that we've talked about, even last week, have now occurred. Now, remember last week, when we were coming into, what was it? Friday of last week, right? We had swung above the weekly. We hit our zone above the weekly 93.5 to essentially 96, the point of control of the most volume traded up here. I said, if this sets a higher low, if it stays above 89, it's going to set a higher low. Look, if we start closing back above 93.5, we're looking 94 to 96 being the area. What do we get? A daily spike right to 96. Next area above there, I've been 96 to 98's the area, right? Well, we got to run to on spot 97,963. There's 98. That big weekly overhead is the next big target for liquidity between 98 and 101. And we can even push it up to the 102 to 103.5 up there before getting into the real thick of it, 105, 107 to 108, and then 109 to 112 and all those areas. But this is higher low structure. It's an uptrend. It doesn't break unless we see closes below, 90,250 to 89 essentially. So that's the zone to the downside. As long as it holds it, it's good. As long as it's trading and closing above the weekly, even better, 93.5, right? This is a weekly higher low close, right? This is where we were failing to even close above. We showed we could close above it, higher low, boom. That was our signal off this higher low. When you show that you can strength, first close above it. We hadn't closed above it before, right? Since getting down here, failure, 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 all the way through. Dumped down to the bottom side, didn't get continuation past these lows, regain the weekly, get that midline, that swing higher low and lower high common swing from the weeklies at 89. Show we can close above the weekly, hold that area at 89, close back above, start moving towards 96, 98, and the next big area is going to be 98 to 101. But it's got to hold this last higher low. So lower term timeframes, like you can see that we've come down to essentially, test this last high, right? Between the close right around, 94 to, essentially 94.8, right? If this holds above the weekly at 93.5, very likely going to continue this higher low trend and then start finding itself in this 98 to 101 region. If this breaks down, $2,000 at a time, man. I'll show you the bands. I'm sure you know where they are because I know you've been using them. But what are we looking at? Below 93.5, right to 92 at the basis. Anywhere below there, it's the lows at around 89 to 90. It's really easy setup for Bitcoin. Like the criteria is so damn clear that I'm watching my timeline. I need to stop watching my timeline, bro. It makes me sad. People are stupid, bro. Like they LARP like they know what they're talking about in markets, man. I feel like I read their posts and I've been infected by the stupidity. Like I caught the virus, man. Like I don't know what to do.
That's exactly what happens.
Now, when you're trading Bitcoin, what time frames are you typically trading?
I don't trade Bitcoin.
No? So you're typically just trading equities then, and then you're just stacking Bitcoin.
Yeah. No, I don't have Bitcoin. I don't buy Bitcoin. I don't have any Bitcoin.
I mean, you observe what Bitcoiners are doing.
Yes.
So you know where they're stacking their Bitcoin.
Yes.
Okay.
Yeah.
Now, what time frame do you prefer to look at when you're evaluating?
Bitcoin.
Like what's your go-to time frame? You open the chart and you're like, I need to see this time frame.
15 minute.
15 minute. All right. So good time frame.
But I'm looking at it on a daily right now.
Yeah. So you're looking at like the same chart I'm looking at essentially.
And the daily says we rejected off, what's that, 98? We rejected off of 98. We're about to dip down. We got a low of 92.3 incoming. Probably going to break below, what is this? Hold on. What is this? Hold on. I got to find a level on this. Hold on a second. We're probably going to break below 94.3. We'll call it 94.250. We're going to break below that. Then we're going to bounce and we're going to break 98. If we break 98, we go to 101, like you said. Next stop is Valhalla.
I'm going to challenge that a little bit, and here's why.
Which part?
The Valhalla part. I mean, Valhalla maybe there's some very specific criteria that needs to be met.
You can't let me do. I'm trying to get the Bitcoin magazine sponsorship and shit. Let me challenge you on I got to throw a little sauce on it for the maxis, Landy.
Bitcoin maxis hate me. They absolutely hate me. To them, I'm not a real Bitcoiner. That's like, I look at charts. I'm not a real Bitcoiner. So But this is what Bitcoin is contending with. I'm just going to pick out the closes. Overhead, you've got close. You've got close. You've got close. You've got close. You've got another close. You've got another close. Then you've got all these closes, right? You just pick a common closing point, and then you've got the all-time high close. This cluster between this 98 to this high, you can just aggregate all as one zone. So we can get rid of all those lines, and I will. But like this area at 98 to this high at 112 encapsulates all of these closes. Look at all these lines that are in here for closes, right? Between the swing at 98, the swing at 112. We now have all of these closes. Of course, I had to move it with my mouse because I misclicked. But this is a high traffic zone. You know what the most likely outcome is from a weekly trend break, right? You know this. Come on, man. You know. I know you know. You're baiting me. I know you know. You know your shit, bro. I've watched you enough. You know your shit.
I don't know what you're talking about, Lenny. I don't know nothing.
I mean, in theory, from what I have seen, it would tell me that you know what you're talking about, and this is the most likely thing to happen.
Landy, we're going to higher highs. Valhalla, Landy. Valhalla.
Are you looking for? You could be looking for something like this. If we say, "Yo, everybody, go long. Bye bye." Look, this is a realistic scenario, by the way, is make a slightly new higher high in a swing, close back below 123, and then just nuke that shit. That is actually realistic. That would be brutal.
That would be brutal.
But realistically, where is the inflection point of all this crap that I just drew out? Where is the biggest inflection point? Well, right now, where was the last, weekly higher low that was lost, right? So where's the last weekly higher low? It's this guy right here. This is the most recent higher low that Bitcoin had, right? And that's at 107 to 108, 107, 250 to 108, 250 on spot. This is the actual inflection point. This is where everything changes, right? If Bitcoin can regain 107 to 108, you're going to see even the most bearish bears are going to be like, bruh, that's my invalidation for bear market. This is likely going to very high percentage that it runs the high side structure, right? Because this is the last higher low. You see how all these weeklies tried to hold it. Once we nuked through it, we went to this weekly and then boom down, right?
You said 108?
107 and a half, or 107, 250 to 108, 250. This is the weekly higher low.
I see it. I see it on the chart. Yeah.
Now, what did we just test? Or what are we testing and more likely to test? We still got this higher low to get through. That's really what it comes down to, right? So there's a scenario where even just ignoring all of this shit right here and this shit right here, excuse my language, it's a Friday night. But there's a few scenarios that are bearish here. Like even if it can push through the bears have protection. Let's say it rejects here and then just dumps out, right? Goes for lower lows, whatever. Maybe doesn't even get continuation, but just goes for lower lows. Because this is a trend break, a lower high could come in here or anywhere in between here up to this higher low at 107 to 108, but it's still bears got protection above this high at 112. Right. And then there's a lower high right here, 116 and 118 over here. Right. So there is like the bears have cover and everybody talks about a short squeeze. Oh, no, above $100,000, the short squeeze is on. No, that's called short covering. That's not a squeeze. A real squeeze is where they're not just covering, because what they're doing is like if you're going to get a shorts cover above 101, say they cover to 107. They're covering to 107, right? They're covering to short that area, right? So you close down the shorts, you let price rise, and then you cover you're covering into this area. You don't really see a squeeze until not even in any terms of a real true squeeze. We ain't looking at that until we see closes above 108 on the weekly. And even then, they got cover till 112. That's where things actually, that's the inflection point for me. So if we do regain anything in this is all no man's land. We close between 101 and 108, right? Right here. That's no man's land. That's all bear territory. Above 108, things get interesting because 112 is now in play. And that's where this is the green light, right? And even in candle structure, that's where the high side zone really cracks open for the bulls. But this setup is still bearish. They could run all the way to the top side, swing the highs, and it's still bearish because this setup, they need to come down, form higher low structure, and trend up because this is an expansion to the downside. Any kind of band running from the bottom side all the way to the top side for new highs, even up to like 130, 140, that's last hurrah. You better get out because that's going to turn out real, real bad. You better take profits and reposition.
These next 2 days are going to be interesting, man.
Well, into this weekly close, yes. I want to show you one more thing before we sign off here, and this is volume profiles that I think you should pay attention to specifically. Not Binance, not Bybit, not any of these exchanges. You want to pay attention to Coinbase Spot, specifically BTC USD. David. You want to do here's something that I think that
HJ can call daily candle closes from a 1 minute chart. You gotta have the HJ confirmation.
Yo, I love that. Pull up your this is a little bit of and this is just something to reference. You pull your fixed range volume profiles. And what I'm going to do here is the major lows all the way through. So we've got the major low here from $49,000 all the way through on the weekly, right? So that's everything from $49,000. Remember, we made the new all-time high. This was the major low, which was the retest of the ETF open. And this is understanding where we are, right? So this was the ETF high. We dumped out to 38.5. We made a new all-time high. We retested the ETFs from January of 24. If you pull a volume profile from that higher low or that on the monthly all the way over, hey, guess what the inflection point of this entire area is? It's right at $96,000. Well, now you take every major higher low from the monthly up on this weekly chart, and you can say, all right, now where are we in terms of highest volume traded since this last major higher low at 74? Look at where we're trapped. We're trapped between the two highest volume nodes at 87 to the downside on the highest volume traded price for the most recent price action since 74. Highest volume traded price because of this consolidation is now right around 87. For the entire structure on the way up since 49 is at 96. If we break out the top side of this, we're going to have a nice run, probably hit that 107 to 108.
We got 2 closes. We got 2 daily candle closes above 6. Well, one above 6 and the other one crossed.
Yeah, exactly. But it rejected, and we see the weekly is now sitting below it. So because we're looking at this volume profile on the weekly, it's going to be the same on the daily, but if we're still trapped between these two very important high volume profile nodes, it's just a waiting game. It's just a waiting game, bro. It's like all about just wait for something interesting to happen on the weekly. And above 96, I think things get a little bit more interesting on closes. So that's kind of what I'm going to be watching for this Sunday, coming into Sunday close.
Is what?
Is to see if we get a weekly candle close above $96,000 coming into Monday. So this Sunday at 4 p.m. Pacific Standard Time, 7 p.m. Eastern, If we get a close above $96,000, that makes things very interesting from this perspective of looking at the most volume traded prices, because it's very highly likely we will test that 98 to 101 and potentially higher, getting in towards that 102, 103, and possibly 105 to 107, 108.
Rotation incoming.
Yeah. We'll see, Ben. I'm excited.
Rotation incoming.
We'll have to touch on it if we do get an upside move.
Bitcoin as we're going to Valhalla.
Yo, bro.
Hotep, you're a genius. HotepJesus.com.
DG's in the chat thinking to himself, like, man, if this does turn out bearish, I'm going to wring Landy's neck. Yeah.
Landy said he's been trading commodities. Can we look at some? Has some swing on soybean oil. What is he looking at?
Oh, I'm trading primarily precious metals commodities. I'm not trading.
Like what? What's the ticker?
Oh, I mean, I've been trading silver, gold, palladium, platinum.
I did a
copper.
silver trade this week. It traded me well. How did silver do today? Oh, it ended positive? Oh no, it's negative.
No, it was down. It's probably putting in maybe a local top on the daily, but
it's a green. It's a green on the daily. It's the green on the daily.
The daily? No, daily closed red for silver.
Wait, hold on. I'm sorry. What's the ticker you looking at?
Silver?
Yeah.
So it closed the daily red.
Oh, what's the ticker?
It's just CFDs on silver.
Who?
CFDs on silver. Just type in silver, you'll get the TVC. I mean, you can go to Comex Direct, but you can do this on silver.
Which one do you choose? Cash? CMC?
TVC.
TVC. US dollars per ounce? Okay.
Yeah.
Okay. I see it now. Oh.
Yeah.
Oh, I meant to ask you about silver.
Yeah.
What's going on with silver, bro? They about to do some funny shit, ain't they? Because the U.S. Mint said their novelty silver is no longer for sale. They don't know the price of silver. So, like, when shit hits the fan and they ain't got enough silver to back up their paper silver, what's gonna happen? Are they gonna come confiscate our silver is the price of paper silver going to crash, or is it gonna go up?
Paper silver is probably gonna crash. But here's the
thing. That's what I figured.
But this is up and to the right until proven otherwise, right? So that's what it is, right? It's just a grind, and it's on higher term time frame. Silver's in a massive move, but it will have a large correction, probably getting close to it from like a weekly time frame, but that takes a couple weeks to play out. We need to see the high come in on a weekly, and then we can start evaluating structure from there. But realistically, what's happening with silver between Shanghai and COMEX, that disconnect is, look, Shanghai's falling behind on deliverables, right? Why do you think they're restricting exports of refined silver? Also, understand that those companies that they've restricted exports to, a lot of American investors in those companies. Hey, how did they get whitelisted? Oh, just understand that here in the United States, COMEX, only about 10% of silver is deliverable, right? So there's not really, this is hoarding. All right. So a lot of people are like, oh, it's a squeeze on production side. No, it's not. This is all of what's happening with gold and silver is not because there isn't enough refined silver and gold. This is all because of, you're going to hear like, oh, it's because of loss of confidence in the US dollar. No, it's a loss of confidence, and it's games being played on nation state levels to really it's hoarding to hedge against fiat currencies in general, not just the US dollar. And here's how you know it's not just the US dollar. And then, there's a lot of funny stuff that can happen, but look at Dixie gaining strength, right? Obviously there's overhead resistance, it's trapped, right? But Dixie's going up, silver's going up as well. If it was really a trade and a hedge against Dixie as it stands right here, right now, you don't look here. You don't look at silver. You look at the bond markets, right? It's not, and it is a trade from in a dump on a trade out of holding U.S. debt, right? And IOUs essentially to commodities, but the squeeze is it is not driven by the supply and demand necessarily. It is because there's people hoarding to allow to basically force the squeeze to happen. So what we have is that the paper trade can break two ways. If you look at silver as it stands right now, the paper trade can break to the downside. It can continue to break and really send it parabolic to the upside from here as well. So that's what you really have to pay attention to. But on the monthly, this thing is vertical, right? And this can last a lot longer than many traders can stay Sullivan if they're on the short side, by the way. So like 110 silver is definitely in the cards. You know, we close anywhere above 88, for instance. But above $100 is pretty easy to hit from here if things don't start correcting right from here. Anywhere above $70, this thing is fine. Anywhere above $70, I'll say it again, this thing's fine. It's up and to the right. Even if we get a correction back to $70 from here, right now, it's still likely going to chop around those highs. If it busts below 70, this thing's probably coming back down into the 50s, 50 to $55, maybe, 60 obviously is going to be an area to try to base, but you're looking $55. This close open on the monthly is really where the upper first is on the monthly. 50 to $55 would be the name of the game. But until this thing actually puts in a high on a weekly time frame, which it has not done, it's up and to the right. 98 to 103 is fair game from here. Obviously 95 to 98 is the next big zone, and then 98 to like 103, 104, it could even swing above there. Like there's no saying where it's going to go because that paper trade can continue to unwind. Everybody was talking about like, oh, well, the margin requirements and the increase on CME and like, dude, that was so minor. They're going to have to keep doing it if they want to smash this down, right? Because you'd have to unwind to cover, and you're just unwinding one side to cover the other. Like it's just becoming a bracket trades because it's the same amount of liquidity still. It's really got to bust one way or another, and it's just a matter of which larger player in the world really wants to break the back of it, either to the upside or downside.
How you feel about oil?
Oil's trapped in a zone right now on the daily. Above 63, we're looking 65 to 70. If it drops 58, we're probably running 55 again. If it gets anywhere below there, 50 to 55 is the zone. Anywhere above 65, or we're looking, the highs here to 66.50, 66.60. If that breaches, we're looking 70 to the 74 to 75 region, and then heading on up. This is CFDs on WTI crude. It's just a clean chart, Markel. That's one of the reasons why I use it. So some people are like, why are you using that chart? Mainly because I use the CFDs, mainly because they're just cleaner charts. But this is CFDs on WTI crude. It's going to be the same. It's going to be generally the same across stuff. It's just like, what are you trading? What's available on your brokerage platform and stuff like that. In this case, I could see 65. If it does not close above 65, though, it could very easily just swing these highs over here, right? 66. It could swing it and then come right back down. But we had a big correction off of Trump's, a Trump tweet. It's always a Trump tweet, right? So big correction down. High is set. Daily is likely looking at, below 60.97. It's pressured down. What I'd say is below around 58. We're looking to 57 to 55 as kind of the last, we spiked off this weekly down here, right? So we spiked off that weekly at 55.76. If we lose 58, 55 to 57 is the area to watch. If we lose that, we're headed into the actual zone between 50 and 55.
It looked like we bouncing off 59, 15.
Yeah. I mean, this is a trend. This is a trend reversal, right? It was the downtrend here. We had the low set to a higher high. So we need to see a higher low come in. And that's probably going to come in. If anything, it's either going to be here or it needs to maintain around 58 to avoid a run of that last low.
Mm-hmm.
And then, I'm looking 65 to 70 first, and then 70 to 75, just taking in $5 increments. And then it's going to be about this zone up here, 74.40 to 78.40. That $4 zone up here is going to be very, very important. And that's where, this is long-term area that acted as an inflection point on lower term timeframes, where this major high back in 18 came in. This is going to be the zone to watch, at least locally as it relates to the daily. I think the weekly setting up to have a move, but with oil, and we are at a point where we have robust supply in the market, it can be smashed down. So that's one of the things to consider. Like OPEC Plus is managing their supply, and this is where the geopolitical environment as it relates to oil is something you need to watch. But the weekly does look like it wants to bottom here and then try to head up. But I would be very, very careful and just pay attention to what's happening in the geopolitical environment, because we do have robust global supply of oil right now.
Man, the Bitcoin weekly chart looks good, man. Bitcoin weekly chart it looked better than the oil chart.
I mean, it's trying for the upside.
They look just alike. It just looks like Bitcoin looks better. They look just alike. They both got that downtrend with the busy bounce.
Well, here's the thing. When you look at oil, the setup is a little bit different, because if you really dig into that weekly on oil, this is more like a almost like a double bottom structure, or even a triple bottom structure for oil, with no break to the upside, right? When you look at Bitcoin's just a mean reversion. This isn't, and this has already hit its mean reversion, spiked the upper.
Look at the weekly though.
Failed for oil.
No, for Bitcoin.
Yeah, but Bitcoin hasn't. We got to close that weekly. When I need to see it close.
No, I'm saying, look, we got 1, 2, 3, 4, 5, 6, 7, 8, 7 candles.
You're talking about just this
key
structure.
levels. Yeah, look at all of them. They touched the same key level. I got marked out, and it bounced right off of them. Strong support in that area, man. Strong support, of course, in this 85.5 area.
Of course. No, I get it, but this is a bear setup. This is a bear setup, bro. This is bear setup all the way, because
we going to Valhalla.
It's a bear setup like this, right? Or what you need to see from here, the only way that it doesn't have a lower high is if we go and make a higher high.
So you saying oil doesn't have a bearish setup?
Oil has a more bullish weekly setup, but it's more subject to that global supply, and we are oversupplied on.
So you're going based upon external factors. We're not looking at just the chart.
No. It is the chart. The chart has a more.
The chart is bullish
for oil.
For oil?
Yeah.
Pull it up on the screen.
I'm gonna show you. Look, this is a bull setup. It's not confirmed. This here's why. 1, 2, 3 common area of support off of a high time frame support. You have 3 lows being set here.
Bitcoin did the same thing.
No, it didn't.
Yes, it did. In a
No,
row.
it didn't. Bro, this is from
You don't
April
got
of
your levels on the
2025.
Bitcoin. You said what?
This is from April of 2025. This is a weekly. This is where Bitcoin and oil have been. Right?
I got my support levels from November 25 and the super low from November 24.
Okay.
That's where I got my levels
For oil.
from. For Bitcoin.
Well, Bitcoin. Okay.
For Bitcoin, I got my levels. I got my bottom here at 80, which we rejected off of a few weeks ago. That is based upon a November 2024 level. So I'm on the high time frames too. Come on now, Landy.
Yeah, but this here is a very different structure than oil is in right now. This is a very different. This is a trend break to the downside. Right? So when you're looking at this, you have a trend break. What's the more likely thing to happen? You go up, you make a lower high, right? And then you make a lower low typically, right?
Yeah.
Or the only way that this ends up from here as a bull setup would be this lower low to a new all-time high. That is the only way that this would be. But that's not a classic bull setup.
I think we got on a bullish setup, I think we break 104.5 in 2 weeks.
So that would be here. That would be this
weekly. We
retest
the support at what's that? 95.5. Call it 95.5 or just call it 95.
Okay,
right?
So what you're looking for is a lower high to higher low.
Yeah.
So this is not the bullish setup then. This higher low would be the actual bull setup because that's the reversal.
Correct.
That would be the bull setup.
That's what I'm talking about.
That very well could happen.
That's my prediction.
I could see that happen. Okay, this is where I have said to David Gokhshtein many times. I've said this across various stages with my friends over at Wolf Bitcoin that I share stages with, ATC that I share stages with. I've said this on my videos. I've literally screamed it out my window at my neighbor. The macro top has not been confirmed for Bitcoin, which leaves the door open for this exact setup that you just talked about that you are calling.
Yeah.
Which is we come up, we make a lower high, but then we come into a higher low, which is the trend reversal setup to trend break. That's what that would be, right? That's your trend reversal. So you get the lower high, you get the trend reversal, you get the trend break, boom, new all-time highs, we go on a run.
Yeah.
That's your
that'll be confirmed in the next few days.
Wait. Whoa. Hell no. Hell no.
I'm going to confirm it in 3 days. Check back with Hotep Jesus. I'm confirming it in 3 days.
Yo, you need candle structure to actually develop. You need at least
I don't need all
2
of that.
more weeks.
I don't need all of that.
2 more weeks.
I don't need none of that. I'm going to tell you in 2 days.
Yo. I freaking love it. Oh, I freaking love it. Bro. Hotep Jesus, everybody. I fucking love you, bro.
Hotep, you're a genius. HotepJesus.com.
Give me 2 days. Give me 2 days and I'm going to let you know. Holla back on Monday.
Yo, I'm going to, if by the way, because it is a realistic scenario that you're positing, right?
Yeah.
If you are correct, David needs to send you an actual crystal ball.
I want my crystal ball. If it happens, I want my crystal ball too.
You heard that, David?
It up with HR. I want my crystal ball, yo.
Yo, that's some funny shit, brother. Yeah, man. next week. So you're saying in 2 days. Next week, I'm gonna find a free afternoon, and I'm gonna try to jump on your stream during the day. I wanna see where you're at before Friday. All right.
Before Friday, we're gonna confirm some things on the daily, but I'm gonna know by Monday.
All right. Hell yeah. All right.
All right, ladies and gentlemen, another nightly recap with Hotep Jesus and Crypto Landy. We're gonna come back next week. We're gonna confirm, is Bitcoin in fact bullish and going to new all-time highs? Not financial advice. Do your own research. I can't wait. Landy, thank you for coming through, bro.
Thank you, man. Thank you.
All right,
HJ.
ladies.